Hey everybody, Courtney Smith here. August 20th, Wall Street winners. Dog days of August? Not for us. We're smoking it. We're enjoying it. Life is muy bueno. All right, let's get right into it. And this is completely muy bueno. Even if it's not in Spanish, it's still muy bueno. All right, let's get right into it here. Okay, little bit of a dip, a little bit of a rally. This is all normal price action. We should expect the price to go up and make a teeny tiny high. We're not in the mode where we're going to see a big melt up. We're not in that mode. It really, if we look at seasonality, we'll look at it here in a second, we really should be dribbling lower, but instead we're dribbling higher. That's actually pretty darn good. Now, this was a little bit disturbing here. In the upper right-hand corner, we see that the red line, which is selling pressure, is now below the green line, which is buying pressure. So here in the Dow, we're seeing more selling pressure than buying pressure. Now, at the same time, we went and made a new high on the move. Holy moly, that's very, very unusual that in spite of the selling pressure, we went and moved to a new high on the move. So this looks, if I look at this chart, it kind of looks like we'll get up around 25,800, 25,900, and then we'll have another little sell-off. Nothing big is happening here, but you can see it's a chugging bull market. NASDAQ, same formation, except we didn't make a new high on the move, but the purple predictor did start to move higher. So it actually turned out, it's turning out to be a little bit better. Now, seasonality, I'm going to show you two charts, okay? This is our seasonality indicator, and you can see there's the red line, and what I've said is if we break that 162 level, I'm going to change my ranking of seasonality from bullish to neutral. But we're a long way away from 162. And the yellow lines show that we might be forming what's called an ascending triangle formation, which is a bullish formation if it breaks through the highs at just under 170. So right now, we're stuck in the middle of it. We'll follow whichever way it breaks out, up or down. Now, this is the seasonality chart that we've been using. This comes from Stock Traders Almanac, highly recommended. And you can see that both the red and the black lines basically say we're going to go sideways. A little up, a little down, until October. And then we would expect a very sharp rally. But let me show you another chart. And this one comes from Ned Davis Research. And this chart here, you can see it really looks at the all midterm election years. That's the blue. And then a midterm year after a positive post-election, which is what we had. That's the black line. This one combines the one-year seasonal cycle, the 4-year presidential cycle, and the 10-year decennial cycle into the blue line. And what you can see is it's calling that we're going to make a little bit of a new high up here, and then we're going to start to chop down into the low in the beginning of October, and then once again, a big fourth quarter rally. Now, this indicator is actually more scientific than the Stock Traders Almanac one, which is why I like it. I actually was almost the CEO of this company many years ago, but you can see that it's done a pretty darn good job of calling the market. Now, as they say, trend is more important than level, and it's called the trends in the market beautifully. If we follow this, we should see a new high here, and then a chop lower, then a chop higher, and December should be fantastic. So I'll be showing you both these charts going forward. The yield curve remains, remember it's a leading indicator by a year, it remains neutral. But look at the lower right-hand corner. This is starting to freak people out. Now, I'm not ready to freak out, but I am getting the shakes a little bit. I don't want to see that number at 0.25. I'm really not going to be excited if it goes below 0.5. A flat yield curve is a very bearish phenomenon for the stock market. So we need to make sure that this number doesn't get down as low as, say, 0.25. Then, you know what? I'd say we'd probably have a bear market, 20% decline, crash-orama, some bad stuff. Now, we're not there yet, but we need to be very alert and focused on this chart. Most of the time, this chart, it's irrelevant. It's starting to become relevant, and that's not a good thing. Asset allocation, not really a big news there. We kind of chopped a little bit sideways. No big deal there. Stock market risk indicator. Now, this has been fascinating to me lately because it shows that people want to be in stocks. They just don't want to be in risky stocks. They want to be in boring stocks. Global shares, slamorama. Fortunately, we've been telling you to stay away from this. It's just boring. The U.S. market is where the action is. There's no question about it. I had been promoting Australian shares. Now, in the real world, for you freebies, you don't know what my real trades are. I actually got out of this, and just before the explosion of the upside. So I had a small loss here. If you followed my advice here on Wall Street Winners in the freebie section, you'd actually be having a small profit right now. But we'll stop covering Australia unless I can figure out how to get back in again. Bonds. I'm getting extremely bullish on the bond market. Okay, purple predictor is not bullish. Pretty much everything else is. So look for bonds to go surmount the highs at just over 122.50. Now, what this means is I need to break this down. Tell you what's really going on, what's really moving these markets. The bond market is going up. When bonds go up, that means interest rates go down. So I showed you the yield curve before. So what's really happening here is that the Fed is slowly increasing short-term interest rates, and the bond market is slowly reducing interest rates, thus causing the yield curve to flatten. Very intriguing. Let's take a look at our bond indicators. They all say interest rates are going lower, all of them. The gold line, the CRB, the 10-year treasuries in Germany, but look at the green line. That shows that interest rates really aren't going down, yet all the pressures are down. I'm getting really bulled up here. Really bulled up, looking for a big bull move here in the bonds. The dollar, we talked about this. It broke out to the upside. I hope you're long. That was what we would say was the right thing to do. Now look for a setback to maybe 95.70, and then for that bull market in the dollar to continue. Gold, if the dollar is strong, gold's going to be weak. And sure enough, crackorama, it cracked. We were sideways for almost a month, and in the last week, we cracked down to the 1170 level. It's a bear market, don't you know? You got to be short. Our indicators, though, are not as bearish as the price action is. The top indicator, still have to count that as bearish. The middle indicator, kind of count that as bearish too. But the bottom indicator is quite bullish. So it's not overwhelmingly bearish for gold. Now, oil slipping lower. This has kind of been what I've been telling you. I haven't been excited to trade it. But nonetheless, you kind of have to look at this and say, probably we're going to move lower. Now, Bitcoin was quite interesting. I thought last week that we would break through that 5,800 support level and start to crack down. And part of my reasoning behind that was the weakness in the purple predictor, the purple line there. But you can see that actually, as we dipped down and as we got near the lows of the move, the purple predictor started to move up, and it's moved up a little bit sharply. So I'm looking for the purple predictor to act like a magnet and move the price of Bitcoin up. Now, I don't think we're going to get back up above the 8,500 level or the 8,485 level, but at least move up towards that 8,000 level. That's about all I can expect here right now. Coming up, we've got some great events. I'm in the middle of one right now. We're doing a stock financial freedom system. I'm recording this in Las Vegas. Fantastic. We're having a great time here. You should come to one of our events. They're really a lot of fun. You're going to learn a lot. You're going to really enjoy them a lot. And of course, remember that we rely heavily on stockbutler.com to come up with fantastic trades. So, all right, that's it for me. All you freebies, we will look for you next week.